Oil and wheat have been in focus following Russia's invasion of Ukraine. The commodities have been directly reacting to the headlines out of Eastern Europe as the situation over there develops. Joining me today are Action Alerts Plus co-portfolio manager Chris Versace and president of Teucrium Trading, Sal Gilbertie. First, Sal, can you outline which commodities are being impacted by the current situation in Russia and in Ukraine and what that means for investors?
Sure. The big commodities affected are the energy and the grains and fertilizer as well. Russia, that's related to energy. Russia's an enormous exporter of oil and natural gas, as you've heard in the headlines. They also account for most of the world's wheat. Between Russia and Ukraine, they account for 30% of the exported wheat available. Ukraine accounts for, I think, 16% of the exported corn available. None of those are going to be available. That has probably the biggest impact on those markets than anything else. And, taking barrels of oil, natural gas, corn, and wheat off the market, and sunflower seeds, sunflower oil, it's an enormous impact across the world.
Now, Sal, when we see that start to happen, there's always a knee-jerk reaction in terms of pricing. Based on the data that you're looking at, how baked in is the removal of those ags from the global stage into the current prices? In other words, do we have more to go?
I think we do. And the reason is it's a twofold bake. One is remember, it's winter there. So the ags that are off the market, the export ags, were already harvested last autumn and they are sitting in storage. And so the wheat and corn and sunseed products that were not yet shipped, that were harvested last year, they're still there. They haven't disappeared. They're still in global inventories, but no one can get at them. So that, I think, is what's been priced in right now. What still has to be priced in and won't be able to be priced in until probably midsummer is the new planting this year. So wheat is a winter crop. It's planted in the autumn. Their winter wheat crop is planted in the autumn. It's asleep in the fields right now. It's going to grow. Whether they're fighting or not, that wheat is all going to grow and it will be there to be harvested. As soon as it warms up, that wheat will grow. So there's a question in the wheat markets, will the wheat be harvested and will it be exported? Those questions are not priced in yet. In terms of corn and sunflowers, those are not winter crops. They're spring crops, meaning you have to plant them in the spring. In about mid or April, they start planting very actively over there. And will they plant? Will the corn and the sunseed crops ever be planted? And if they're not, that's going to have a permanent effect on inventories. Whereas the wheat inventories are still on the books, they're still reflected in global statistics. The corn inventories a year from now, if they don't get planted, won't be there. They'll be gone. And the market hasn't priced either of those two things in yet.
We're approaching the spring planting season here in the States, correct? Now, if we were to compare and contrast a little bit, what does that mean for farmers, and when will we get a sense as to how abundant the U.S. forecasted crops might be relative to expectations and how that might impact the world stage?
I think that the United States will plant, farmers are going to rip up their flower beds and plant in the cracks of their sidewalks. You're going to see record crops planted and harvested if the weather cooperates in the United States. This is a tremendous benefit to U.S. farmers. It's a tremendous benefit to South American farmers, and Australian farmers had their best wheat crop ever last year, and they're waiting to sell to the world. So all those places are going to benefit a great deal from this.
So let's focus this on the consumer. What kind of impact could that have? Are we going to see pasta prices maybe not increase by the summer, but by maybe next fall? Could we see those increase and sunflower butter, for example, as well?
I think, yes, you will see all of that because of the disruptions in grain production. I think the consumers are going to see an immediate impact because most of the price of, say, your box of cornflakes is actually energy and packaging, plastic and paper and transportation. And with the high energy costs, that's going to be affected. So consumers are going to see a sustained increase in prices. The immediate one is because of logistics and energy prices going up and shortages. And then there's going to be a prolonged time when the trickle effect of the high price of the actually input of the grains is going to be affected as well.
Now, Sal, has there been any point in time where we've seen something comparable to this? And if we have, how bad did pricing get? Any sense?
Two times come to mind. I was not actively trading, but I was alive in 1972 during the Great Russian Grain Robbery, they called it. And that's when Russia, they didn't have a reporting system of how much grains were sold out of the United States every day. And Russia came in and bought it all because they knew they had a bad crop. So I think this in terms of the impact on the globe is probably like that, but in reverse, the United States supply was removed from the global stage versus this time the Russian supply is removed. And then the drought of 2006 and 2007 in Australia actually caused wheat prices to peak in 2008, higher than I believe they peaked even so far here today on certain exchanges like Minneapolis or this week. And that was simply because Australia had a back-to-back drought. And again, just because it doesn't rain in Australia or the Dakotas, no one in New York City skips their morning bagel. People keep eating no matter what. When you have a supply disruption in grains, this is why you see price spikes. The demand is quite inelastic. And I've not seen anything comparable. I will say that we haven't yet hit the record wheat prices in some places that we saw in 2007, 2008.
And with that, the volatility that we're seeing in wheat too, I mean, is that a concern for you at all, Sal?
It is in terms of the investors that probably aren't experienced with volatile markets. Some are going to have big gains and some are going to have big losses. Our products provide people with a tool, and they will move with the volatility of the futures they hold. So even though we issue ETFs and it's traded on the New York Stock Exchange, it will be no less volatile than if you were trading futures on the Chicago exchanges or elsewhere. So that's what people have to keep in mind. The volatility is tough for planners. It's tough for farmers to lock things in, but with volatility is opportunity. And it'll go away. It'll decline eventually.
All right. Well, Sal, let's move back to thinking about the impact to the consumers. We've got these rising ag prices. How long until we see the flow through to, or packaged goods? In other words, reflected in, say, the data we might collect in the consumer price index?
That's going to vary by product. I mean, it depends on if end users were bought, and I don't think they were. So I think a lot of your just take wheat, your flour and your flour-based products are probably going to see price increases. And because the floor, we believe, on agriculture prices is going to be a little bit higher, you're probably going to see some inflation come in, and then you're not going to see a return to the prices we're used to, say, right now, of buying a 5-pound bag of flour. You're not going to see those prices for quite some time. I suspect for a few years.
Okay. And you guys have not only at Teucrium wheat, but you also have products for soybeans, corn, sugar, and others. Is wheat the most widely used commodity across the consumer channel, or is it one of the other ones, whether it's corn or soybeans?
It's corn, definitely corn. Corn is in everything. There's a reason they call it King Corn and made that movie titled King Corn. Wheat, it should be noted, is the number one for human consumption. So the more of the wheat crop as a percentage is consumed directly by humans than, say, the soybean crop, and then say the corn crop, which is really minuscule. If you took a pie chart and took direct human consumption of just corn on the cob, corn niblets, and corn grits and whatever it is, it doesn't even fit in the slice. The number one use for corn is to feed animals globally. The number two use is to make ethanol, and the number three use is for starch. Starch holds paper together. Okay, so if you use a sheet of paper, you're probably using corn. Corn is everywhere. Corn's the number one most distributed product, no doubt about it.
Okay. And are we seeing any issues? You mentioned earlier that Ukraine is, I think, mid-teens in terms of corn exports. Are we seeing similar spikes in corn prices that we're seeing in wheat as well?
No, we saw a price go up. We saw the price response go up. And it's interesting to us. And we think part of the reason wheat went up so much was there was a short squeeze in wheat, meaning a lot of people were short wheat futures. And the reason is people who were trading spreads were trading short wheat against long corn and long soybeans. The agricultural professionals, that's how they were positioned just before the war broke out. Because wheat, for the last 2 years, before the war, we actually consumed in the world globally more wheat than we produced. So the wheat balance sheet is shrinking. There's still plenty of wheat. we had a 6-month global supply, and now we have, or U.S. supply. Let's take U.S. We had a 6-month global U.S. supply. We always have that in wheat, and now we're down to around, I think, 4 months. There's still plenty of wheat. We're not going to run out of wheat. However, the supplies of corn are shrinking, and the supplies of soybeans are really shrinking. You've had a bad drought in Brazil and Argentina, and the predictions for the amount of soybeans, excess soybeans as a percentage of what we're used to, are going to be much lower than corn, which is going to be lower than wheat. And so the stocks to use ratio, it's a complicated industry term, but wheat actually had the most supplies by that ratio. So a lot of people were short. They all got squeezed out. Now I think as the markets settle and as the months go on, I think people are going to focus more on corn and even more on soybeans. Where the Ukraine corn crop in the spring is in question, so corn will be in the headlines. But over time, it's soybeans that are going to have the tightest balance sheet.
What are some of the end markets for that, Sal? Because when you discussed wheat, you discussed corn, but from a consumer perspective, where are we likely to see the pain in soybeans?
Soybeans goes into animal feed. That's its number one use, and that's gonna raise the price of all animal product production. Soybeans and what we've seen, and this is because of the Ukraine's loss of their sunseed. Soybean oil is a cooking oil. And so is palm oil, and so is sunflower oil, and so is cottonseed oil. They are all rising because of the loss of Ukraine sunseed exports. So Ukraine was 80% of global sunseed exports. That's enormous. It's had an immediate impact. That's what's going to affect most families around the world, especially the poorest families in the poorest countries, where the biggest percentage of their budget is their food budget. And some countries, I've seen studies where the biggest percentage of their food budget is actually their cooking oil. It's a big problem for a lot of people.